Hello, this is Brian London at the New Orleans Investment Conference with noted trading authority and hedge fund advisor on an unofficial basis, I guess, but one of the most widely followed traders in the world today, Dennis Gartman. Dennis, welcome to the conference.
Always good to be here. Come every year. You were kind enough to invite me back. It's a great conference, and thanks for having me back.
It's a standing invitation. Dennis, you know, I know you're watching what's going on in Europe. You watched the agreement yesterday with the 50% haircut in Greek bonds, and a lot of people are looking at that and saying, well, it's really a good step forward, probably a little harsher step than a lot of people expected. What are your views?
Sometimes kicking the can is not such a bad idea, and I think that all we have done truly is kick the can down the road to buy more time. Is this a permanent solution to the problems? Of course not. But I think there were people who had problems when the Constitution was written in the United States. Was that a permanent solution? Turns out that it was, but there were people who took exceptions to our Constitution. So could they have done a more definitive job? Certainly they could have. Will there be more numbers coming out and more decisions to be applied over the course of the next 2 months or so? Yes, of course there will. Will there be people objecting to what was done? Yes, but have they done a reasonable job at this interval? I think they have, because there were a lot of folks thinking that nothing would be accomplished. They at least gave the can a really good kick down the road and bought themselves several months.
Now, they kicked it down the road perhaps with Greece, but what about Italy?
Italy's still going to be a problem. If Greece does go down, and I think Greece eventually will go down, Greece will eventually default, and quite honestly, Greece will eventually either be removed or remove itself from the EMU. It has no choice. And so we have to wonder, when is that going to be accomplished? How is that going to happen? And what will the Italians do? You had to imagine that it was rather comical thinking what Berlusconi in his letter sent to Sarkozy and Merkel when he said, yes, I agree, we will delay retirement in the United States for 2 years, but we won't do it until 2026. That's a bit down the road, and things may change between now and then. But at least they're sitting down, understanding that they do have problems, and they're acknowledging those problems. 2 weeks ago, Sarkozy and Merkel didn't even acknowledge that there were really serious problems to be dealt with.
You know, I find it interesting. We follow the gold market, as you know, very closely here, and I found it interesting that gold was not operating as a safe haven investment until earlier this week, when it had a nice $50 pop in one day, and all of a sudden, it, along with the dollar, were the safe havens of choice. A day or two later, we have an agreement in Europe, so crisis averted, and gold went higher again, so that day it's a risk asset.
I think that gold changes its complexion from day to day. I'm bullish of gold and have been bullish of gold for a long period of time, but I'm bullish of gold not in US dollar terms, but in euro terms, in sterling terms, and every once in a while I even turn that way in yen terms, because quite honestly, I think that gold has become the third reservable asset. The dollar is still the #1 reservable asset. The euro is the #2 reservable asset around the world, but with a lesser and lesser importance. And gold is the third reservable asset, but with an increasing importance. So I actually look at gold as a currency, and I now consider it a cross trade. And when you're trading one currency against another, we call it a currency cross. And so I've actually considered gold to be a cross against the euro, a cross against sterling, and that's the way I look at it. And if you take a look at what's been going on, gold has been going up very nicely in those terms. And if you own gold in euro terms, you're hedged against any adverse movement that the dollar may take, and it actually proves to be a better trade over time.
I know you've taken some heat when you first started that trade, but I know it's worked very well for you.
It's actually worked very well. People laughed at it originally because they said, the gold and dollar move in contravention one to another. Well, not really, not anymore. They sometimes move in contravention, they sometimes move in convention one with another, and so gold has become simply another currency. And yes, now no one seems to laugh at me when I say I own gold in non-US dollar terms. Now we actually have supporters for that notion.
And it really worked for you as the dollar was operating as a safe haven currency
Yes.
along with gold. And a lot of people thought by going in other currencies you were diluting the impact, because gold is historically an anti-dollar, anti-reigning fiat currency trade.
And it's not that way any longer.
But it worked very well for you. Do you see the European agreement having long-term implications for monetary inflation and the precious metals?
I think ultimately the European Central Bank will have no choice but to follow what the Fed has done, what the Bank of England has done, and come up with its own methodology of, we now call it quantitative easing. I'm old enough to remember when it was still called monetization. And I think the ECB will have no choice. but to follow that same process down the line, and that's probably going to be dilutive of the euro and beneficial to the gold market in general. I actually thought that Trichet, before he stood down from the presidency of the ECB, would make life a little easier for Mr. Draghi, the new ECB president, and begin that process beforehand. But I think he's going to leave it up to Draghi to be the one to do it. That's probably a French versus Italy sort of circumstance. Right. There's probably some competition. Mr. Trichet, being French, has become more German than any German had been. And so now I guess he's left it to Mr. Draghi to say, I'll be the one to have to monetize to quantitatively ease. I think that's the course of action that they have to go down.
Well, Dennis, thank you for your views. I know you're getting ready to go on stage, and our audience is looking forward to your opinions, as always. So thank you for coming.
Well, as I said, you guys will apparently let anybody go on stage. I'm glad to be here. It's an honor every year, and I always enjoy coming to New Orleans. Thanks, Brian, for having me here.
Thank you. Well, Dennis.